Welcome to TradeTheMBI.com. This is John. This report is for the 18th of June. And, well, we're still hovering right around the ABM. We could see from the weakness that we were having that we were expecting more tests of it. Potentially even a break of it would be within what we would expect. We're breaking into a lower zone. We are seeing a little bit of the orange fading instead of continuing to spike higher. So from that standpoint, you're getting a little bit of a closing of the mouth, so to speak, to the snake that we referred to. And we never did below the red line. So from that standpoint, there's not a lot of weakness. We're not seeing a huge distribution or anything, just not sufficient buyers to really press things. But you can see a big difference, though, from the NQ. Still much stronger overall than the S&P. I mean, in fact, you still have cyan under red. So significant difference between these. I mean, it's like almost two different markets at this particular point, which cannot be sustained. So it's an important thing to remember. It cannot be sustained over a duration of time because of the mean reversion nature, as well as the mixed number of players in between here. But what it's suggesting to you is that NASDAQ-related stocks are overweighting the S&P and causing a separation and a divergence between the two. And that means that there's either difficulty in the broader market for the S&P 500 companies, or you're just getting a few select NASDAQ companies that are way outperforming in general. So it's worth watching because when those do mean revert, and they will, that will cause a substantial move in the NASDAQ lower, but probably less so from an S&P standpoint. So you can see this is our blue line here for the euro. We're right back to the lows of it, well within our expectation of it going forward. The question is, will the DOC here from the red standpoint stay above the previous dip levels? It's already higher, so any return pivot from at this particular point would be a net positive from what we would look for buy signal. But I would expect this to break to new lows before you would get that. That's just more or less the typical. Right now you have orange and steel within the continuation zone, though you can see that we've got the reverse happening here with orange moving lower and steel moving higher. And shorts have pretty much gotten to a strong peak. So we'll see if this is peaking out from a decline standpoint. We're going to base right here at the top side of the down range, or as some might say, the bottom side of the breakout. It depends how you want to. It's a half full, half empty sort of viewpoint. TLT still way out of control. This is an interesting one with the whole yield situation, and this all goes back to what I've been talking about for years, and it came down to labor and whether or not you have a sufficient supply of workers to fill what they called, low unemployment or almost no full employment from the statistical standpoint, which was never accurate. It was never really a true signal. We were always talking about labor participation, that there was a sufficient supply of people out there that when given the opportunity to work because of robust or improving conditions, that they would. And we're starting to see that. The question is when that gets satisfied. And because of the poor statistics of really maintaining who is out there because of the way they drop people off the rolls, it's going to be a difficult one to determine. And we all know from serious economics that when inflation starts, it's going to be a rapid and sudden event that is going to trigger, and it's going to be triggered off of rising wages, and that's usually going to happen rather quickly because the demand will outstrip the number of workers that can be found, period, and that will cause significant increases in wages. That will spark inflation. Everything else, as long as oil is moderate where it is, that's not going to do it. You would need a spike of serious time in oil along with wages to really create the problem. And this paranoia of the Fed being behind the curve, they're going to have to be behind the curve, otherwise they're going to blow out and create stagflation. If they haven't learned that lesson after all this time, there's nothing you can do for them, and they're helpless, which some of us might argue they already have been. They don't want necessarily the strong growth in that because it, to them, creates for too much uncertainty. They would rather have people muddling along. interestingly enough. Oh yeah, let's just have everybody doing, pour, and then it's all right. Never mind. We don't want excited movement or huge robust development. But that's neither here nor there. The reality is oil right back down to those lows. So it retested the dip there. We knew that was coming after the pop, and pretty efficiently coming right back to it. And again, as long as you have this, you're not having the strain that we talked about. The early pop in oil was literally for the start of this summer. Now the dip that you might be seeing there is only going to have an impact when it comes to later part of the year. Surprise weakness here is gold. And there's just nothing catalyst-wise to drive this yet, because we're not seeing the significant inflation that the Fed is indicating exists with their rate increases, though their rate increases in a lot of cases are just the normalization of what interest rates should be, though don't necessarily know that it's required. I think they see an opportunity to go ahead and do it while they can, and so they're taking advantage of it. So let's look at Friday's charts from the ES5K. Very interesting setups here. We ended up with this gold coming down here at the zero line, and as it popped up, it was a hard short opportunity after being short from much higher up, and easy one to take advantage of for the return back to the lows. Did that. And then it produced this lovely white candle right here before the nice run-up. And that was a pretty good run-up going through. Provided a little bit of a short to the 50%, and then the gold candle came in above the 50%. Now, that doesn't negate the fact the white candle exists there. It just means that it's, as we've talked about before, it could take a day, sometimes two, for it to reach its target in some cases, and really strong bull pushes afterwards. It can take a week or so. But we started to get just this ton of positive extremes developing. As we got into the midday, we ended up with a small retrace, pretty much just the ABM green going across. But this lingering setup right there was not going to go away. From a signal wise, we ended up with the first DOC came in, it was right over, right about this point right here as we started to get to the ABM yellow. Again, for me, it's one of those where I love to look for the steel cross setups and then see what's happening with my green and or steel. Because a lot of times what will happen is you'll get this orange steel cross, and it'll be dramatic enough that it'll cross the cyan and the orange will have moved above green. It didn't happen in this particular case. You didn't even get the steel cross until right about there, which was still early. And mind you, that's significantly early, but what was powerful about it was cyan moving above zero at the same time that it crosses. Those become significant plays. And an 84 was not bad. I was attacking this a bit higher, simply because it was attractive. I had had the previous ones. Let me see what my average is right here. We can find out where I'm actually 86.5. It's currently where mine sit, and then that's just below the overall low. I was taking advantage of the pops that came into here. I had 85.75 there, and then we went up to the 87.50, and I caught right in between, and we stayed across there for a couple more bars before it finally, and then actually even had it going into the end of the day. Again, we started with the end here having a DOC spread developing in what was the post-market as well, though it shot way up to 86.75. So all the way back up there, even higher, and I added into it at that particular point as well. And of course, then we opened up and plummeted right to, the target range. And that's the beauty of it. Just having that ease. Now, the 74 one goes back to a previous white candle from, days back. Yeah, right back here. So you can see the interplay of those things over time. Pretty strong. And I love it from that standpoint, because it really, when you're looking at a range that's 22, you can really take advantage of that probability when you're, talking about significant runs. Even if you're taking portions of the 50%, it still gives you a broader perspective to say, hey, within this short-term chart, I can still see something much greater. And I think that becomes powerful when trying to look for it, because even within some of these weak things, it's like, oh, well, this point I could see that the steel crosses here and then. Well, you can play that forever, particularly even when it comes to a short like this, where it's like stagnation going across, and then it just doesn't break down. And sometimes if you wait for the breakdown, you'll miss the peak prices, because at that particular point, it will move significantly, like trying to capture the end of this bar. It's like, okay, that was the move underway, and it had already done it. Fortunately, in this particular case, the DOC spread came in. It was right there around 81.50 range. But still, in my view, that's like giving up 5 points. And you would have had a lot of heat. You would have been like thinking, oh my God, I'm going to be, stopped out over the 100% there. And it's like, yeah. And that's where that EBM becomes more powerful. If you have that short bias going through with soft numbers, then you know that that's the point you want to be thinking, okay, I should take my profits long-wise and be flexible on a turnaround move at that particular point. So that's the way we're going to start the week. Looks like we're going to have some softness, and there's going to be a little bit more uncertainty growing, which is not a bad thing. I think that should create a little bit of summer excitement as we head towards the ending part of the month. As always, though, I'll put up relevant charts on the Skype chat. Trade well.